you're buying stocks, it can be tempting to have a bias towards popular stocks or those with top-tier name recognition like Netflix or like Cisco. But the name alone won't guarantee big gains in your portfolio. That's why it's important to filter out the noise and combat your bias by leveraging data and charts to help you make your buying decisions. So today, let's go over IBD's tips for buying large cap stocks. Now, of course, this is a great guide to use when you're considering any stock to buy, but it's especially important to keep in mind when you're looking at these bigger popular stocks to make sure your emotions don't get in the way. So first, don't buy stocks simply because they're widely held. Take GE, for example. That's one of the most actively traded stocks in the market, even though shares have essentially been in a free fall for the past 2.5 years and growth has slowed tremendously. Now, the company is trying to turn things around, but it hasn't been able to do so yet. So instead of buying a big name stock that looks cheap, analyze the chart and fundamentals first. Fundamentals are key because stocks follow their corporate earnings. Remember, it's ideal to see bottom line growth of at least 25%, and it's even better when that growth shows acceleration. And the chart is important because our research shows that buying stocks that are already in uptrends increases the likelihood of profiting from that trade. Now keep in mind, of course, that timing when you sell is just as important as timing when you buy. Now, making sure the chart and the fundamentals are up to snuff also prevents you from getting carried away with the story of a stock. This is where Tesla is a great example. Tesla is no doubt an innovative company with a great story, but the stock is now trading at the same levels it was all the way back in 2014. So if you held that stock for 5 years, it's essentially gone nowhere as the company continues its cash burn. Okay. So now, let's put Apple and Microsoft head-to-head to demonstrate another concept here. Don't expect leading stocks will always be leaders, and don't expect lagging stocks will always be laggards. So to explain this, let's first take a look at a weekly chart of Apple. Now, Apple is a long-time holding in many portfolios, of course, but for position traders, the stock is flashing some weakness. Apple staged a breakout over a cup with handle base several weeks ago, but shares hit resistance at the buy point and quickly turned tail amid broader market weakness. The next week, Apple triggered a sell signal by falling more than 7% below the proper buy point. That means this buy point is no longer valid, even though the stock is trying to rebound. Now, the weak chart action comes amid fundamental weakness too. Apple has now seen 2 quarters in a row of declining earnings, and sales growth is also weak amid waning iPhone demand. So in short, just because Apple has been a big winner in the past, investors shouldn't automatically expect it to be a leader now and moving forward. Now, Microsoft's chart, on the other hand, shows somewhat of the opposite picture. After peaking in the dot-com era, it took Microsoft nearly 16 years before it reached new high ground again. So Microsoft was a long-term laggard until about 3 years ago. Earnings and sales growth has consistently been in the double digits over the past year, and the chart looks strong. You can see how compared to Apple, shares of Microsoft were able to hold up much better in the Q4 2018 correction. Microsoft broke out of a cup with handle base in late February, and after a 22% run, shares formed and broke out of another base. And Microsoft is currently trading within the 5% buy zone as it seeks support at its 10-week line. So all in all, don't let a personal bias or preconceived notion get in the way of finding the best stocks at the right time. And instead of buying an individual big cap stock that's a laggard, your portfolio would be better off buying an ETF that contains an array of large cap stocks as its holdings. We'll talk about what exactly the QQQ ETF offers investors when we come back.